This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome, and this is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is September 24th, 2020. This is show number 124. So, Nick, indexes sold off pretty sharply yesterday, huh?
Yeah, we had a big decline yesterday, and it was on an uptick in volume. We didn't trade over 100 million shares on the spiders, but it was quite a sell-off across the board, too. It was broad-based. And so far, the month of September has been an ugly month for the markets. And historically speaking, September and October are known to be very, very tough markets for the bulls. And don't forget, we've been talking about it on here, and I've been saying it for the last, really since late August, that the election risk is certainly in play here, and that could last all the way into November. So, you want to be a little bit on the guarded side right now. These markets, even today, have been all over the map. So it really is a very, very turbulent environment, to say the least.
Yeah, and so is it just election risk we're talking about? What do you think is really underlying cause here?
Yeah, I think that we had a sensational rally from March, and now I think it's primarily election risk. I think that every day we hear more and more news coming out of the media that the election is not going to be settled, and there could be mail-in ballots that are counted for months afterwards. I mean, just ridiculous stuff, and that's adding part of the jitters. But the cycle tells us this is what's supposed to happen as well. So, it's just part of the script, really.
Yeah. So caution is still the buy word. And what do you do here?
Well, if you have 3 choices. One, you could watch the chart patterns, and then you could play these moves short term. Number 2, if you're, I've been short a little bit here for the first time really since March, and I'm sticking with that. But I've already made money on my primary short position, so I'm just really riding that second half position out, and I think we have more downside to go. And then the timing factors, that's really when time's up and the selling is done, then I think it's time to get back in. I think this will lead to a buying opportunity ultimately. But again, you're going to see this market turbulent going forward. So it's a tougher tape right now for anybody. It's a much, much tougher tape. So you want to be a little bit careful here. Cut down your share size is something that I recommend if you're going to be an active trader. If you're not in a rush, just let the markets give you a good setup, and then you'll get a chance to get a really, really good buying opportunity.
All right, and then we're looking at the initial weekly jobless claims.
Yeah, we got the weekly initial claims number today. It was released at 8:30 this morning. Came in at, I believe, 870,000. This was a little higher than expected, but come somewhat right in line. And then we got the weekly continuing claims at 12.58 million, which was slightly better than expected. So either way, things are slowly improving, but it's slow moving right now. And again, going into this election, I think everybody just has to put the news aside and just let the markets do what they're going to do. But I think we got a lot more chop going on over the next few weeks.
And I read somewhere that the states that have over 10% employment, you won't believe it, but they're all blue states. What a shock there, huh?
I mean, this is probably the most, I've never seen anything like this. I've been a student of history, a student of the markets. Like I always tell everybody, I have charts that go back so far it would make people's heads spin, but I've never seen anything like this. I can't remember an election like this. I can't remember it being that intense, and I can't remember it being that political. And the things that I'm seeing out here just, make my head spin like I just can't really just shake it enough. It's just mind blowing. So, just be prepared that this is the environment we're in right now, and the easy money's been made, and now you just gotta, really just take it one day at a time here.
All right. So as far as a retrace to March lows, you're not seeing that still?
No, I don't see any retrace to the March lows. I mean, even if the market was to the worst case scenario, and I think this would be the worst case scenario, you go to around 2,800 on the spiders, 2,900. The March lows were 2,200, so I wouldn't even expect that. I'm not even expecting 2,800. But that would be my worst case scenario.
Huh, interesting. So even though most of the pundits out there are saying, we're on our way back down, you're just not seeing it.
No, I'm not seeing it at all. And again, I rely on mathematical calculations. I rely on chart patterns, formations of it. No, that's not even a thought in my mind at this stage of the game.
So even 2,800 though on the S&P would be quite a ride.
That would be, and that's a possibility. I can't rule that out because mathematically that fits into the formula. So when I look at all these markets and how they're behaving, I'm not sure I see it going that low, but I can't rule that out. But that would be, and what I like to do is I like to take the chart pattern and I say, all right, if I'm completely wrong, what's the worst that can happen here? And that's my worst case scenario.
So that's okay. So that's the worst case scenario, and let's hope that it doesn't.
But if that does happen, though, that's going to lead to probably one of the greatest buying opportunities we've seen in 10 years.
And you think that'll result in a major short squeeze at that point too, right?
Oh, you can make a case that every rally that we've had since the March 2009 low has been on the back of a short squeeze.
Yeah, no doubt. Hey, just briefly, let's talk about gold and silver. Where are we at there?
Yeah, so today we have gold futures trading down about $8. It's not terrible today, but they were absolutely hammered yesterday. So again, they need to come down a little bit more, in my opinion, or maybe not even a little bit more, but they need to settle a little bit in an area. And then I do think we're going to get a good opportunity in gold in a near distant future. So sit tight, be patient with it, and let it set up. But it looks like it is starting. It looks attractive already. I just don't like the overall market at the moment. So if the overall market looked good, I would probably be in gold tomorrow. But the overall market does not look so stable at the moment. So you got to be patient with gold. But you will get a chance at gold. And right now, again, it's not terrible today, but it did get slammed yesterday.
Yeah, and all those naysayers who said, "Oh, you're missing out on the greatest rally in history." Yeah, well, maybe not so much, huh?
Yeah, I mean, there's an old saying, what goes up must come down. And, if you take a look at gold, it had a great move. But I caught the March low. I caught the meet in between, so I didn't catch the last inch on the graph, and that's okay. Now, it's coming down when everybody's going to be fearful to get in. I'm going to be the one that gets in. So, that's kind of the way it works usually. But I'm not too concerned about missing out on a parabolic move. That's very, very difficult to sit in there when that happens. And, again, when it reverses, it usually gives you that zigzag pattern down, or what we call a 1, 2, 3 or an ABC. They're all synonymous. And that's what we got in gold. And it played out pretty much perfectly as expected. Maybe we'll get a little bit more downdraft if the market sells off. But, now I start to eye all the levels and I start to get, prepared to get into that.
All right. And it just reminds me of a saying from Bernard Baruch, one of both our mutual favorites. He said, I got rich letting the other guy make the last 10%.
That's right. He did say that. And, he has a lot of wise words when it comes to the markets. If anybody has not read or studied Bernard Baruch, I would go there and look at what he said. And he also said he never bought the low, he never sold at the top. So again, what you want to do is you want to catch the turns, you want to participate. But like I always tell everybody, if somebody wants something and it's parabolic, they could have it from me every day of the week.
Yeah, I like that though, because it's impossible, even for a trader like you, to catch the extreme low or the extreme top.
Yeah, and I've done it a lot in my life. I've done it quite a bit. But the one thing I've learned about the trading business is that I can be wrong and I can mess up and I can miscalculate. I could, overlook something. We're just human beings. We're not perfect people, but we try to do our best with the experience and knowledge that we've accumulated over the years. But this is a very, very tough business. It's a humbling business too. And, it's just fitting that, in September when in September when the market topped out, you saw all these people with Robinhood. And I think this other guy, Dave Portnoy, was touting that stocks never go down. And, I just look at that stuff and I say, oh, my goodness, people are going to lose a lot of money here. Yeah. And sure enough, it's the same story over and over. And, I've seen it so many times. But like legendary Jesse Livermore used to say, the market never changes because human nature never changes.
It's so true. It's so true. And anytime you hear somebody say in any market, the market always goes up, you could be sure that at some point it's going to head for a fall. We had the same thing in real estate up until 08 and 09. Real estate always goes up. It had its wipeout, and then, in fact, it did go up. But at this point in time, it could very well go down as well.
Yeah, I mean, these cycles all repeat themselves. And I'll never forget, in 2006, 2007, I think everybody can remember that like it was yesterday. But people were, fighting on front lawn. I sold my house in 2005. People were fighting on my front lawn, bidding it up. And I sold it, by owner, not even with a realtor. And I couldn't believe I had 60 people show up at my front door bidding the house higher. And I said, oh, my goodness, this is the greatest top ever. And, you see that euphoria, that rush, and it just doesn't stop. It just repeats itself over and over and over again. And then in 2011, when I bought my primary real estate where I live, my primary home, people were laughing at me. They were like, real estate, what are you, crazy? You want to own real estate? And, I made my members a lot of money because a lot of them bought a lot of property at that time, too.
Yeah, Florida real estate especially. I knew somebody I was working with in 2010. He literally rushed into Florida with every penny he had, and he was buying foreclosed properties, particularly lots and houses, and flipping them for 40-50% instantaneously. Because like most times when the market goes up or it goes down, any market, it's going to be at the end exaggerated, and it'll go way up or way down in spite of the fundamentals.
That's 100% correct. And well said. That word exaggerated is just perfect, because that's what happens, and you see it all the time, and that's where the opportunities lie. And again, the big money is made on the turns. And I learned that many, many years ago from Paul Tudor Jones. He used to say that the big money was made on the turning points. And, I've been doing shows with you, Kerry, for so long now. We've seen those turns, and that's where, everybody is fearful, and that's where you make that big hit in the market. But again, when you get into these markets right now where it's just been a grind and choppiness, it baits everybody in. The allure is there, but the patterns, the setups aren't there yet. But they will come, and they always come on, big downdrafts. That's when you get your buying opportunities. And when you get these parabolic, euphoric type up moves, that's where you get your shorting opportunities. So, it's a game. It takes a long time to learn. And again, even as you're learning, and even if you think you know it, you still can be fooled sometimes. It's not easy.
No, it's not easy. If it was so easy, everyone would be doing it. And then it's at the market top when everybody rushes in, when all the fools rush in for fear of missing out, FOMO. That's kind of the end of the move. Well, anyways, make sure you go over, take a look at Nick's site, inthemoneystocks.com. See his trading record going back for years. Check out the Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Send us your questions, your comments, your feedback to KL@KerryLutz.com, and Nick will pick up tomorrow.
Sounds good, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01.